Welcome to the Deloitte Debrief. Today's topic is about China customs and international trade. I am today's host, Dolly Zhang, a tax partner of Deloitte in Shanghai, China. Now let me introduce my fellow speakers, Shelley Ma and Roger Chen, who will be presenting this webinar with me. Shelley Ma is the tax director of Deloitte in Shenzhen, and Roger Chen is the tax director of Deloitte in Shanghai. You can find out more about this through the top left-handed side at any time during this debrief. Before we start, please allow me to give you a brief overview of the functions of the webcast control panel. PC users can zoom in and out each box on the control panel at any time, and you can also explore the icons at the bottom of the screen. If you want to download the slides for this webinar, you can click the link in the Download and Links box in the top right hand. Mobile device users can review the slides, polling questions and questionnaire on your screen. You can also type questions at any time in the dialog box at the bottom of the screen and click the Submit button to submit your questions. We will try to answer all of your questions during the webinar. If you want a proof of attendance for this debrief, please click on the Claim CPE icon at the bottom right of this page to download your CPE certificate immediately after the webinar. Please note that we only provide CPE and CPD hours for certain regions. For more detailed information, please refer to the Deloitte online webinar website. Next slide. So firstly, let us take a look at the trend of customs and trade in the last 12 months, both globally and in China. U.S.-China relationship continue to have an impact on the global supply chain. And we can also see there are rise in trade measures, export controls, and sanctions applied. In particular, China has made a lot of efforts in establishing and structuring its legal framework on export controls. On the other side, the vast development of export control from the US, EU, including the recent sanction on Russia, also have an impact on the global supply chain. COVID-19 recovery efforts have also pushed for more foreign direct investment in certain sectors, while it remains a challenge to the supply chain arrangement. Let's take a look at the customs regime. It can be featured by the following. Free trade agreements are on the rise. Together with customs and trade facilitation efforts, RCEP and other bilateral and multilateral efforts, such as China, Japan, Korea FTA. Locally in China, with an effort to promote the dual circulation economy, China has also been optimizing its local special customs areas. This will include pilot program in Hainan, Great Bay Area, Lingang, as well as more innovation on the China Special Zone. On the other side, we also see a rise in customs audits. Voluntary disclosure program is encouraged by the government as an effective tool to minimize penalty. China customs have been focusing on customs valuation and transfer pricing adjustments, with joint efforts and information exchange with other authorities such as the Tax Bureau and the Foreign Exchange Bureau. With that note, there are also increased focus on supply chain and import-export compliance. China has updated its authorized economic operator system, in compliance for import and export companies. And we can also see globally, more countries have been rolling out green plans as a roadmap towards carbon neutrality and try to attract investment. For China, green and clean energy related industry are anticipated to enjoy more incentive. Lastly, the increasing on digital trade agreements will increase cross-border digital ecosystem. As part of the post-COVID developments, we've seen more efforts for paperless digital methods in managing trade at the authorities' angle. Harmonized tax, customs, and legal framework towards a fairness trade environment. From the business angle, there's also an increase in the usage of global trade management system and other software or automation tool to cope with increasing electronic data requirements. Next slide. On that basis, in this brief debrief, we will mainly introduce the hot topics in China international trade environment. We will cover the following topics: update on tariff policy for Hainan Free Trade Port, comprehensive bounded zone. On the compliance side, we will also update you on the China export control development, AU requirement, and last but not least, the recent trends of China customs audits. Followed by an Q&A session, our webcast today will then come to an end. Next slide. So before we start the first topic, I would like to invite you to spend a few seconds to answer the first polling question. The question is, what is the overall import and export volume growth in 2021 compared with that in 2020? There are 5 options in place. While we are waiting for the result, I'd like to ask Roger for a question. Hey, Roger, due to the COVID situation in China, companies may experience challenges on import and export. What will be your suggestion for them to deal with the challenge?
Yeah, thanks, Dolly. In the short term, yes, based on our observation, there definitely an impact on the cost and efficiency of the trade and the cross-border logistics based on the impact from the COVID-19. China government is trying their best to keep the ports open and maintain the logistic running. And a lot of measures have been published to encourage the companies to be reopened. For a specific situation, there should be also be case-by-case support from customs and other authorities. Meanwhile, companies are advised to maintain a flexible supply chain and have sufficient communication with local customs to deal with the current challenge. We're happy to support in the communication if any needed. Thank you, Dolly.
Okay, so let's take a look. So briefly speaking, I think the 2021 result is still demonstrating a positive growth in around 10%, while some companies remain the same trade volume. Thank you. With that, let's start the first topic. In June 2020, China have published the master plan for Hainan Free Trade Port, and there are a series of policy and incentives. Now, I'm pleased to invite Shirley Ma to explain more.
All right, thanks, Dolly. First of all, let's take a look at the latest updates on Hainan Free Trade Port. The master plan for the construction of Hainan Free Trade Port is in line with the highest international standard of trade management rules for special economic zones. China has established policies and institutional framework for Hainan Free Trade Port step by step in phases. The independent customs operations in 2025 will be an important milestone. Under the premise of effective supervision, a special customs supervision zone shall be constructed for closed operation on the whole island. After this special operation, Hainan Free Trade Port will follow the principle of having free flow through the front line, exercising effective control at the second line, and free flow within Hainan Island. The front line refers to setting up a boundary between Hainan Free Trade Port and other countries and regions outside the customs territory of the People's Republic of China. For the entry or exit link of the front line, customs will enhance supervision of security access and enhance control of public health security, as well as by safety, food safety, and product quality and safety at national border. under the premise of ensuring the fulfillment of obligations stipulated in the international treaties to which China is a party or a member. The list of goods and items that are prohibited or restricted from import and export shall be formulated in Hainan Free Trade Port. The goods and items out of the list shall be freely imported and exported and supervised by the customs authority according to law. After the closing off of customs in 2025, the catalogue of goods and items subjected to import duties at Hainan Free Trade Port will be implemented, and goods out of the catalogue will be exempt from import duties when entering Hainan Free Trade Port. The second line refers to establishing a second boundary between Hainan Free Trade Port and other areas within the customs territory of People's Republic of China. When goods enter China mainland from Hainan Free Trade Port, relevant formalities shall be handled, and customs duty and import-related tax shall be levied according to the regulations. After the island-wide independence customs operation, the tax treatment in Hainan Island will be further simplified. Freedom in the island, it means that the customs implements low intervention, precise supervision on enterprises and institutions in Hainan Free Trade Port. There is no storage period limit for goods in Hainan Free Trade Port, and storage places can be chosen freely. The goods that are subject to zero tariff policy is exempt from routine supervision from customs. Before the independent customs operation on the entire island, Yangpu Comprehensive Free Trade Zone will be regarded as a pilot area to take the lead in implementing free flow through the front line, effective control at the second line. At the same time, the master plan makes it clear to establish 1 negative and 3 positive zero tariff system for imported goods. Since June 2020, the list of zero tariff goods has been released successfully, and so far, the positive zero tariff list for raw materials and supplementary material, the positive list for vehicle and yachts, and the negative list for self-use production equipment have been released and implemented. A positive list of zero tariff on imported goods for local consumption is still to be published. In addition to the above-mentioned 1 negative and 3 positive zero tariff list, value added from processing policy is also a measure. For goods which are produced by enterprises in impoverished industries but do not contain import materials or with an added value to the imported materials that are processed of more than 30%, no import duty will be levied when finished products selling to China domestic area through the second line. Consumption tax shall be levied. On this page, you can clearly see the policy implementation approach of domestic sales of goods with value added from processing. For goods processed and manufactured using zero tariff raw materials and supplementary material, if they are sold within Hainan Island or sold to China mainland, import duties, import VAT, and import consumption tax shall be levied. If the enterprise would like to explore domestic market, they may consider of not importing materials or processing with imported materials whose value added from processing increased by more than 30%, so as to avoid import duties on domestic sales. If an enterprise wants to produce in Hainan and explore overseas market, the production model of both raw materials and the final product abroad is a good choice. Materials are exempt from import duty and import-related tax, and the finished products are directly exported. The duty cost saving created for enterprise are significant. Next page, please. This page mainly introduced 2 important transitional policies for manufacturing and processing enterprises. the zero tariff policy for raw and supplementary materials, and the zero tariff policy for self-use production equipment. The zero tariff list for raw and supplementary materials have been adjusted. On December 24, 2021, the list was updated by adding 187 items to the original first batch, so that the total number of goods and items on the current list is 356, which further release policy effects and supports the construction of Hainan Free Trade Port. The supplementary materials subject to zero tariff are subject to customs supervision from customs. Enterprises engaging in business of raw material and supplementary material shall establish electronic accounts and international control management system which comply with the customs requirement to realize the whole processing tracking of raw materials consumption. The equipment set out on the negative list mainly involve equipment that are not environmentally friendly or have high energy consumption, duties, import VAT, and import consumption tax. Self-use production equipment subject to zero tariff may only be used by eligible enterprises in Hainan Free Trade Port and shall be subject to the supervision of the customs in accordance with the law for a period of 3 years. And that's all from my side. Back to you, Dolly.
Thank you, Shelley. I believe there's a lot of opportunities in Hainan. And before we move to the next topic, let's do the second polling question. The question is your company currently carrying out any business within special customs supervision area? Such area would be like bounded zone, comprehensive bounded zone, bounded port, etc. There are 5 options for you to choose. While you are doing your polling, I have a question for Shelley. Shelley, you mentioned about the encouraged industry may enjoy some preferential treatment. So can you explain more on what do you mean by encouraged industry?
Shelley might be muted. Yes, Dolly, for the enterprises in encouraged industry, that means any enterprises that takes the industry projects stipulated in the catalog of encouraged industry in Hainan Free Trade Port as its main business, has a substantial operation in Hainan, and its main business income accounts for 60 or more of its total income, may apply for the certification as an enterprise in encouraged industry. The corresponding encouraged industries can be found in the catalog of encouraged industry in the Hainan Free Trade Port 2020 edition. Back to you, Dolly.
Thank you. Now let's share the result of the polling. So it seems that currently there are only around 20% companies are carrying out business in the bounded zone, either by itself or through the third party, while over 80% of our clients or audience have not yet operating the bounded zone. So I think next, let's give Roger the time for him to introduce the bounded zone and also some innovative measures.
Okay, thank you, Dolly. So on general, first this year, the General Administration of Customs, GAC, on the basis of opinions sought earlier last year, formally published the administrative measures for a comprehensive bounded zone, CBZ, of the PRC. The measure has officially come into force from April the 1st, 2022. Perhaps the concept of CBZ is a little unfamiliar to you, or maybe you have heard a lot of terms such as bounded zone, bounded port area, export processing zone, etc. So first, please allow me give you an explanation about what a CBZ. In fact, CBZ refers to a special customs supervision area, which is integrating the customs, taxation, and foreign exchange policies of bounded port, bounded areas, export processing areas, and bounded logistic areas. So to develop international transshipment, distribution, procurement, export trade, export processing, and other businesses. So it's a special zone with highest level of openness, the widest range of preferential policies, the most complete functions, and the most simplified procedure in our country at present. In 2015, the State Council issued the proposals for accelerating the integration and optimization of special customs supervision areas. After that, according to this requirement, China Customs has taken the lead in optimizing and integrating export processing zones, bounded logistic parks, cross-border industrial zones, and other customs supervision zones into the CBZ. Therefore, by the end of 2021, according to statistics, there were 155 CBZ among the total 168 special zones in China, accounting for over 90%. We believe that the remaining more than non-CBZ will gradually transition to CBZ in the near future. Previously, the CBZ were mainly managed by referring the interim measure for bounded port areas, while supplemented by some special customs announcements. With the initial completion of optimization and integration, it is therefore necessary to make a special administrative measure for CBZ. So that's the background of this new measure. Compared with the original interim measures for bounded port zones, the new measure makes great changes in aspects such as reflecting new functions of the zone, simplifying supervision procedures, promoting circular development inside and outside the zones, specifying quarantine requirements for goods within the zone, and requiring information system such as those aspects. So I may give you a brief introduction on the measure support and promote some new bounded business plan in next page. In recent years, under the expectations of the business, based on the original basic positioning function of CBZ, some innovative functions, including bounded R&D, bounded repair, bounded lease, and other functions have been gradually introduced to CBZs. And the GAC has issued announcements for several times to support the development of such innovative bounded business types in the CBZs. Let's take bounded R&D as an example. In 2019, GAC has published an announcement on the basic requirements and the relevant regulatory procedures for the bounded R&D business to be carried within the CBZ. In details, companies in CBZ could import some materials for R&D which was prohibited in relevant catalogs, but a special electronic account book for bounded R&D should be established. This year's administrative measure further specified the right of enterprises within CBZs to conduct bounded R&D, helping more research-oriented enterprises to reduce their R&D costs. And another example is about the bonded repair service, which was also a concern from many manufacturing enterprises. Due to environmental protection and many other factors, it was very difficult to carry out repair service within customs supervision zones. So in order to promote the development of bonded repair business in the zone, GAC issued two specific rules in 2015 and 2018 to preliminarily clarify the relevant regulatory methods for bonded repair business. Later in 2019, the State Council announced publicly to promote companies to build a repair and the maintenance center in CBZs. Therefore, in 2020, the Ministry of Commerce, the Ministry of Ecology and the Environment, and the GAC has a white list of 55 categories of products, including aerospace, shipping vessel, rail transport, engineer machinery, communication equipment, and other products as the first batch, which are allowed to bonded repair in CBZ. And at the end of last year, these three ministries jointly released another white list, which added 15 types of products, including game consoles and Type B supersonic products. So the policies, on one hand, will help the processing and manufacturing enterprises to find more business opportunities, and on the other hand, will help build a more complete supply chain system to better meet the needs of both domestic and international markets. I will not explain into details about bonded lease and bonded delivery of futures business here. And in addition to above-mentioned business, the measure also provided impetus in many innovative areas, such as cross-border e-commerce, general taxpayer of VAT, and bonded art exhibition, etc. So let's take a look at business case in next page about bonded repair. Okay, Company A, it's a manufacturing enterprise registered in CBZ. So it would like to undertake some product repair and maintenance service for both local manufactured and overseas originated under the background of the COVID-19 epidemic. So can it make use of the relevant policies on bonded repair just introduced? In general, yes, but still with some restrictive conditions. First of all, the company itself must meet certain conditions, such as credit rating from customs and having a perfect information system and so on. Second, if a company is going to repair products made by foreign companies, according to current policy, they must fall within the existing white list of 70 categories of products. However, for the products manufactured in China, it can even it is not within the white fall within the white list. It is allowed. In addition, the regulation and the policies also allow the company A to outsource part of their repair procedure to other domestic company for entrusted repair due to work procedure or other reasons. During the whole repair process, the company could choose whether the materials used in the repair is bonded or not. After the maintenance, the finished products that came from abroad should be returned abroad, and the finished goods that came from domestic should be returned to China market. Customs also had corresponding supervision and requirements for the leftover materials, replacement parts, and other materials produced in the maintenance process. So, considering the preferential policies in CBZ, if your companies are planning to do business such as bonded repair in CBZ in the future, we also suggest that you first fully understand the preferential policies, and secondly, trying to improve your information systems to meet the requirement from customs. Thirdly, improve the ability of compliance management to clarify what can be done and what cannot be done in the zone. And finally, comprehensive consider other policies such as tax, foreign exchange policies to facilitate further decision making. Okay, my introduction for this part has ended. Dolly.
Thank you, Shelley and Roger, for sharing the latest development on Hainan and also China Special Zone. So now let's shift it to the compliance angle. Firstly, on the China export control. Since the promulgation of export control in late 2020, many of our clients are very concerned about China's next action on the export control sector. So today we've summarized some key developments to share with you. Firstly, as you can see, China MOFCOM have issued a guiding opinion on the establishment of internal compliance mechanism for export control, focusing on dual-use items. The guiding opinion is composed of 5 parts, including the guiding rules, basic principles, basic elements, improving measures, and other provisions. Within that, the guiding opinion and basic principle specify the overall requirement for the export control for exporters. The basic elements specify the specific tasks from policy formulation to archive management. Improving measures are actually refers to the 6 tasks more from the government's perspective on how the China government will help the exporters to establish compliance policies. Amongst which the final task is to provide the enterprise with a guideline on export control internal compliance system for dual-use item. This is an important updated version and include very comprehensive on some best practice. This is actually an update and the last version was back in 2027. Next slide. And in addition to this very comprehensive guideline, we also witnessed that in the last 12 months, the China's MOFCOM took 3 significant actions in relation to export control. First, MOFCOM published the export control white paper. And second, they launched the China Export Control Information, an official national export control website. And it has also released a 2022 category of the dual-use items control list. Therefore, it is critical for companies to be familiarized with those documents and any potential impact to the business. First, let's take a look at the white paper. The white paper are published in both Chinese and English. It outlines China's fundamental position on export control. In specific, it states that China firmly stands by the United Nations regime and the principles of international law. It also specifies that China safeguards the authority of international treaties and mechanisms that aim to uphold multilateralism. This will include an active promotion of a fair, reasonable, and non-discriminatory international export control. Let's also take a look at the China Export Control Information website. It is a very useful portal for business to obtain a better understanding of China's export control, and it is part of the China government authorities' ongoing efforts to support business with developing export control compliance program. This website includes relevant laws and regulations, frequently asked questions, and also case studies. One case study features a company that established an export control compliance program to address multi-jurisdictional export control compliance risks in multiple countries and developing relevant internal policies. Lastly, the 2022 catalog. It was published in late last year. China announced this catalog, and this catalog came into effect from the first day of 2022. The catalog is revised in accordance with the export control law, the measures for the administration of import and export license of dual-use items and technologies, and also China's 2022 import and export tariff. It is worthwhile to know that the license for dual-use item and technology should be obtained in accordance with the law, regardless of whether the item or technology are listed in this catalog. In other words, the operator should mainly rely on the commodity description in the catalog for a license determination, while the customs HS code are only for reference. It is possible that in some cases, although the goods to be exported are not fall within the HS code listed in the catalog, the dual-use item may still be subject to control and a license should be obtained for compliance purpose. As we can see, the China government's recent action suggests that Chinese regulatory environment surrounding export control is changing more rapidly than before. It is anticipated that there will be more increased oversight by the government for enforcement of those rules and regulations. Therefore, companies with business interest in China should not wait to start assessing the impact of those rules to their own business. For a company that determines the Chinese export compliance requirements are too significant to manage, it might be appropriate to also consider redesigning the supply chain for the controlled items that feature. Such a decision should require a comprehensive evaluation of the relevant impact on trade compliance, supply chain feasibility, and other business considerations. Okay, talking about the export control, and then we will move to the next topic for Shirley to introduce the new AEO requirement in China. Shirley, back to you.
Okay, next page, please. On September 13, 2021, the General Administration of Customs released measures for credit management of enterprises, which contains some key updates from the current AEO system. In detail, it includes, first of all, the whole chain credit management model, including credit supervision, credit cultivation, and credit repair has been established. During the 14th five-year plan period, the Customs will continue to foster more qualified enterprises to become advanced certificate enterprises. Secondly, the means of credit supervision have been further improved, and an enterprise credit repair system has been formally established in the area of customs service. Thirdly, the new measures for credit management optimize the enterprise credit rating from the origin 4 levels to 3 and cancel the origin level of general certificate enterprise, which is now divided into 3 levels, which is advanced certificate enterprise, dishonest enterprise, and other enterprise subject to regular management measures. This adjustment does have an impact on general certificate enterprise because the level of benefits previously enjoyed by general certificate enterprise is higher than that enjoyed by general credit enterprise, but now they are included in the same group. Therefore, for general certificate enterprise, if they are willing to apply for the management measures for advanced certificate enterprise, Customs Authority will give priority to cultivation and certification. The next page, please. The new criterion came into force from November 1st, 2021. The new criterion for advanced certificate enterprise maintain the structure of one general criteria plus several different criterion, for which additional criterion are added on the basis of the original internal control criterion, financial condition criterion, compliance criterion, and the trade security criterion, with a total of 5 types of criterions. At the same time, different revisions have been made to the original 4 types of criterion. Take the general criterion and criterion for consignee and consignors of import and export goods example. The outline of the revision is as follows. Firstly, regarding internal control criteria, the requirement of quality management for good, cosmetics, animal and plant products, industrial products, and other inspection commodities are deleted. However, even if this criteria is deleted, if the company's qualified inspection and quarantine rate is less than 99%, it will still lose points under management requirement criterion. There are also new criterion of access control. This newly added criterion requires the company to establish a safety access control system, under which pre-examination shall be conducted so as to ensure that goods, places of origin, manufacturer, consignee, and consignors are in accordance with China's safety access requirement. The financial criterion clearly requires that the audit report of an advanced certificate enterprise shall be unqualified opinion. Financial indicators also require the asset liability ratio shouldn't exceed 95% for 3 past years. For compliance criterion, on one hand, it uplifts the tolerance maximum amount of administrative penalties imposed by the customs. On the other hand, requirements are newly introduced on the declaration of tax-related elements. For trade security criterion, requirements for cleaning and disinfection treatment of transportation vehicles are newly added. Additional criterion: if an enterprise is a sample enterprise of China's foreign trade export leading index enterprises, or a sample of enterprise whose direction of imported goods are under investigation, or other sample enterprise under special statistical investigation, points may be added after the confirmation of the customs. Next page, please. There are 4 main methods adopted by customs in implementing the certification of AEO, namely desk review, sample investigation, on-site inspection, and staff interview. Desk review includes inspecting the records of the enterprise internal control, trade safety, and other relevant systems to inspect the actual implementation of AEO criterion. The sample investigation includes the sampling of declaration forms to identify potential mistakes and conduct walking through tests to understand the current status of enterprise information system. On-site inspection mainly refers to inspecting the production places, warehouses, entrances, and other places of the enterprise by customs AEO validator. Customs AEO validator may also log into enterprise information system on-site to check the information security. Staff interview is mainly conducted between customs officers and staff members from enterprise. AEO validator from customs may talk with the management team or personnel from HR department, finance department, and trade security related department. Okay, next page. Under the new policy of customs credit management, we summarize the key considering points for application of AEO advanced certification. First of all, if an enterprise would like to apply for advanced certificate enterprise, it is advised to conduct self-examination and gap analysis based on AEO criterion and actual business operation to have a deep understanding of current situation and prepare a corresponding working plan for next step. Secondly, rectification shall be carried out in respect of gap identified. After the above-mentioned rectification, the enterprise shall prepare the corresponding documents for application and keep communication with in-charge customs. According to the application material submitted, the customs in charge shall carry out tax review and on-site validation. Customs will issue the certificate and a conclusion of pass or not pass within the specific timeline. Normally, Customs will issue the inspection result within 90 days from the application date. After the enterprise obtains the certificate result, it also needs to accept the Customs periodic review. In general, the recertification period is 5 years. If there is any abnormal situation, the Customs may also carry out review on a random basis. Therefore, the enterprise shall effectively implement the above-mentioned criterion, establish and conduct regular self-assessment, fully document the self-assessment procedure and the responsible parties to ensure continued compliance of the AEO management system. Okay, Dolly, back to you.
Thank you, Shelley. That brings us to the third polling question for today. The question is, does the new AEO policies have any impact on your company's business? Are you planning to apply for an advanced certified enterprise? There are six options for you to choose. While you are doing the polling, Shelley, I do have a question. So far, how many countries and regions have entered into AEO mutual recognition with China?
So far, China Customs has signed the agreement mutual recognition of AEO with 22 economic entities, including European Union, Singapore, Japan, and South Korea, covering 48 countries or regions, ranking the first in the world in terms of countries mutually recognized.
Thank you, Shelley. Okay, so based on the feedback, so far, companies are still evaluating the impact in order to consider whether it should apply for an advanced certified enterprise or not. Thank you, Shelley. Now, our last but not least topic is regarding the trend on customs audit and investigation. Roger, would you like to introduce on this topic?
Okay, sure. So in general, affected by the epidemic and other factors, China Customs is increasing dedicated to promote the import and export business and strive to help importer, exporter to overcome the current difficulties. But at the same time, just like Dolly, you mentioned, China Customs is still carrying out various forms of audits and questioning in a number of key areas or fields. For example, let's take customs valuation as an example. Valuation used to be a key focus by China Customs. A lot of companies have been, as a lot of companies has been aware, China Customs has established three, we call it Tax Collection and Administration Bureau, TCAB. These TCABs, three TCABs are located in Guangzhou, Shanghai, and Beijing. Guangzhou TCAB is responsible for chemical goods. Shanghai is mainly for mechanical, electronical, and medical device products. And Beijing is responsible for other industries, including apparel, medicine, and food products, and so on. Currently, the three TCABs are conducting audits on transfer pricing and royalties with regard to certain particular industries. For example, Shanghai TCAB carries out TP survey every year on some well-known and leading groups with large import volume in medical device and electronic industry to establish an internal custom database to analyze the transfer pricing issues of importers. In addition, Beijing has continuously conducted the transfer pricing audit to apparel industries. In recent years, it is established a set of benchmark study in the subdivision of the industry, and from last year, based on our observation, the domestic sales channels are also taken into consideration when valuation. Let's take another example about the classification. China Customs continuously using big data to identify wrong classification and relevant duty and license issues. In extreme cases, for some special goods, taxpayer may also be faced with negative impact of anti-dumping duty, consumption tax, and other import taxes, which are much higher than the most favored nation import duty. Besides, China Customs has also strengthened its inspection on labeling of commodities, the dangerous goods transportation, and the warehousing requirement, which was previously responsible by China CIQ, China Entry Exit Inspection and Quarantine. So let's take a look at a case about custom price audit. So company A is engaged mainly in the importation of medical device. Its import business is mainly about procurement from overseas related parties. And the domestic business is to distribute the medical device goods to third-party medical institutions. In the past, the local distribution channel is from the company A through third party to the medical institutions. With the promotion of two invoice systems and the volume-based procurement policies in China, company A is gradually adjusting its sales directly to medical institutions. So that's some changes in the background for the background. As an industry with traditional high profit margin, China Customs has always been focusing on import price of medical device. So company A, since company A mainly involved in related party transaction with high profit margin, China Customs has already adjusted its suitable value according to the median profit level of the compatible companies. With the business model changes, it is estimated that the enterprise will be sharply decreased in the market. So the profit margin of company A will also be impacted as well, which has already been challenged by a local tax authority. So company A is now considering reach an agreement with tax authority by the way of an advanced pricing arrangement, APA. At the same time, company A is also discussing with its overseas related party to see whether they can reduce the import price to maintain a relevant, reasonable profit margin in China. However, company A is also worried that if the price further reduce, it may bring further challenges from customs as well, and therefore it is necessary to consider a negotiation with customs on price in advance. For example, also apply an advanced ruling to avoid double taxation by both tax and customs authorities. So strategic-wise, company A's idea is very correct. Early negotiation with both tax authority or customs is very effective way to avoid follow-up disputes. However, given that China tax authority and customs operate independently, so it is still doubtful whether a document issued by one authority would be recognized or accepted by the other. So it is better to involve the third party in advance, for example, to involve customs in the negotiation of an APA with tax authority, or at least bring some the opinion from customs into the negotiation process in order to minimize subsequent inconsistent conclusions. Due to the time limit, I'm going to stop here. Dolly, back to you.
Thank you, Roger. Now we will have some opportunity to answer question. Due to time limit, I will pick up one question for Roger to answer. So the question is, at the tax team, we are not very familiarized with AEO. So what in specific are the benefits of AEO?
Yeah, there are a lot of benefits for AEO companies from China customs. For example, the average inspection rate of imported and exported goods for AEO companies should be lower than 20% of the average inspection rate of the enterprise subject to regular management measures, unless otherwise specified by law, administrative regulation, or by general or by JC. So let's take a number to see. Usually for AEO company in China, the inspection rate is lower than 1%, while for the normal enterprises, the inspection rate will be usually 3 to 5%. So that's a big difference. If you can apply for AEO certification company, that could be the benefit. And there are a lot of other benefits as well. I will not introduce all the benefits here. Okay, Dolly.
Thank you, Roger. I think in summary, the AEO will not only provide efficiency in terms of operation, but from an overall tax perspective, China government also have the mutual recognition mechanism with other departments. For example, an AEO is more likely to also get a better rating for tax and export VAT refund perspective. Okay, thank you, Roger and Shelley, and also thank you for all the audience for participating in our webinar. We hope you will complete the polling question that pops up on your screen and let us know what you think about this webinar. For those who are unable to attend this webinar in time, please know that this webinar will be archived for future reference. If you feel that this webinar is suitable for others to watch, please forward your registration email to them and ask them to log on to Deloitte Webinars website. We will respond to all the questions raised during the webinar over the next 2 weeks. And please don't forget to tune on to our next scheduled webcast from the Financial Service Industry Series on the 17th of May, titled Financial Services Series, Tax Development in India. Finally, on behalf of the Deloitte colleagues, I would like to thank you once again for participating in our webinar today. Thank you and goodbye.
Thank you. Bye-bye.